So eliminating losses, if there's a way to do that, why isn't everybody doing it?
I would say, amongst the folks that are actually a part of my wealth plan club, really the reasons that I hear for folks who haven't done it is because they were never introduced to this concept. And even though the concepts are very, very simple, they require no more than middle school math to understand. If we look at our educational journey, from the time we're in middle school to when we get to high school to when we get to college, most of our education and training is really focused on making us dependent on the capitalist system in which we live, living paycheck to paycheck, deciding that we want to go out and actually, go take on a large amount of debt, which is collateralized by a home, the American dream. The difference, though, is when you look at stories of folks that have really made it, and I'm talking about multi-billionaire status, they got started very early, and they got started in a different way. And what they did was actual real ownership without having to leverage debt to acquire the ownership. What does that mean? If you've got $100,000, you can actually put $100,000 down on, let's say, a $400,000 house, right? You're actually taking on $300,000 in debt. On the flip side, if you have $100,000 and you invest it, let's say, in Apple, this isn't financial advice, but if you were to invest that $100,000 in Apple, the difference there is based on the actual brokerage system that we have in the United States. Not only do you actually own outright the piece of the business that you bought when you spent $100,000 on Apple, the brokerage system will actually allow you to be your own bank, which means that if you got $100,000 in Apple, because it's been such a well-performing company, the brokerage will actually allow you to borrow against that asset, and it's collateralized by the asset. So in some cases, I work with folks who have got $100,000 in Apple, but they might need, $70,000 to start a business. Well, they're able to actually leverage $50,000 of that $100,000, start the business, and pay themselves back. All the while, they never had to sell any of their Apple stock. So while they spent a year, 2 years, 3 years developing that business, growing that $50,000 investment, hopefully into $250,000, Apple stock that they own for that $100,000 is working in the background over those 3 years as well. And if we look at just what's happened this year in Apple stock, it has actually achieved new all-time highs. And that is really the byproduct of excellent leadership, excellent product, excellent services. You find that those businesses, productive assets that we own, they are going to outperform over time.
So in your opinion, what's one thing that sets a good investor from a great investor apart?
Yeah, so a good investor from a great investor. I know there's so much that's been written about this, but I would say that it's really just about automating and removing emotion from your investment decisions. I would say that really there are three human tendencies that I come across in working with the folks that come to join our wealth plan club, and that's fear, greed, and ego, all right? So fear, very, very simple. There's two sides of the coin. Fear of missing out. Oh my goodness, I see, and let's go back to Apple stock. It's at all-time highs. Oh my gosh, I need to buy right now. And there is, let's call it a disconnect about how the stock market works. When a company is running up, it doesn't mean that it's always just going to be a straight line up. There will be times where investors may take some profits off of the table. So fear of missing out may cause an investor to overpay for an investment, right? Because they're chasing, right, a concept or an idea. But also fear of losing money. So maybe because of their fear of missing out, they might buy a company at $300 or $400 a share, and that company might come all the way down to $250 or $225. And that fear of losing money will cause them to sell, as opposed to actually allowing the company the time to actually grow and develop as a great investment. So fear, greed, which kind of drives the American capitalist system in general. And so our desire to retire earlier, to make more money faster, that sort of feeds into this frenzy in some cases that we may find in the markets, and then also ego. There are a number of folks who may all of a sudden say, well, I've watched all the YouTube videos, I've looked at all of the interviews that Rosemary's ever done, I've read all the books, and I just know where the market is going to go. And as Warren Buffett has said so aptly, the markets can remain irrational longer than most investors, or really any investor, can remain solvent. So even if you do actually know, and you feel like you know, and you're like, there's no way that this company can keep going down and down and down and down, I'm just going to keep buying, I'm just going to keep holding on. What Warren is really saying is that the markets can remain irrational longer than you can continue to buy into that investment. So really, for investors that are just getting started, my recommendation, and once again, not financial advice, but what I've seen work very, very well over decades and decades, is just creating an automated way out of every paycheck or anytime you get paid to actually own as much of the American financial ecosystem as possible. And if you don't have an idea of what exact companies to pick, just buy a basket of 500 great companies like the S&P, or buy a basket of the top 100 technology companies. If you feel like, hey, technology is transforming the way that we live and interact, we can buy the NASDAQ 100. It's not very, very expensive, and you can do so by just automating it. The beauty of index funds is that they actually are, they're set up in such a way that you don't have to do the buying and selling. So when a company is no longer worthy of being in the S&P, the index will automatically rebalance. It will allow a different company to come in, so that you're always really in the best investments, the best vehicles for your capital.